Strategic financial planning is more than just a buzzword thrown around in boardrooms. It's the backbone of any successful business. Imagine you're steering a ship through unpredictable waters. Without a clear map, you're likely to drift aimlessly, caught in the currents of market fluctuations, economic downturns, and unexpected expenses. But with strategic financial planning, you're not just surviving. You're charting a course toward growth, stability, and long-term success. So, what exactly is strategic financial planning? At its core, it's the process of determining how a company will manage its finances to achieve both short-term and long-term goals. Think of it as a comprehensive roadmap that takes into account every facet of your business operations. It's about understanding how each decision you make affects your financial health and overall performance. A well-crafted financial plan doesn't just sit on a shelf, it's a living document that evolves with your business. Let's break it down further. One of the fundamental components of strategic financial planning is budget development. This isn't just about crunching numbers, it's about creating a financial plan that outlines your projected revenue and expenses for a specific period, usually a fiscal year. A solid budget helps you allocate resources effectively, prioritize spending, and track performance against your goals. It's like having a financial GPS that keeps you on the right track. Now, let's talk about cost systems. These are the processes and techniques you use to determine the cost associated with producing your goods and services. This includes everything from cost accounting to cost analysis and control. By understanding your costs, you can make informed decisions about pricing, production, and resource allocation. It's all about maximizing efficiency and minimizing waste. But what good is a budget if you don't monitor your performance? That's where management reports come in. Regular management reports provide insights into your financial and operational performance. They help you track progress toward your goals and make informed decisions. These reports can include financial statements, budget-to-actual comparisons, and key performance indicators, KPIs. They're your financial report card, giving you a clear picture of where you stand and what adjustments you need to make. Now, let's consider the resources required to achieve your goals. The cost of financial planning can vary significantly based on the size and objectives of your organization. Internal resources, like the time and effort of your staff, play a crucial role, but don't forget about external resources. Hiring consultants or experts can provide valuable insights and guidance. It's essential to think about the type of resources you need, whether it's financial software for analysis or market research tools. And of course, the amount of resources required will depend on the complexity of your financial plan. Larger organizations might need a more extensive budget, while smaller businesses can often achieve their goals with a more modest investment. Let's shift gears a bit and talk about working capital management. This is all about managing your company's short-term assets and liabilities. Think of it as the lifeblood of your business, ensuring you have enough cash flow to meet your obligations and keep operations running smoothly. Key components of working capital management include inventory, receivables, payables, and cash. Managing inventory effectively means finding that sweet spot between having enough stock to meet customer demand and not tying up too much cash in excess inventory. On the receivables side, it's crucial to stay on top of customer payments and manage bad debt. You want to ensure that cash is flowing into your business, not getting stuck in accounts receivable. Then there are payables, which involve managing your company's obligations to suppliers. Negotiating favorable payment terms can help you maintain a healthy cash flow. And let's not forget about cash management itself. Predicting and controlling cash inflows and outflows is vital for financial stability. As you can see, effective working capital management is essential for staying financially stable and seizing growth opportunities. It's all about keeping a close eye on your short-term assets and liabilities so you can make informed decisions that drive profitability. Now, let's discuss the human element of strategic financial planning: employee structure, payroll, and benefits. Your workforce is one of your most significant investments, and managing it wisely is crucial for your financial success. Employee structure refers to the number and types of workers needed to achieve your goals. It's about balancing the size and makeup of your workforce across departments and locations. Payroll is another critical aspect. It's not just about cutting checks. It involves calculating regular pay, overtime, bonuses, and other forms of compensation. You need to ensure that your payroll aligns with your financial goals while remaining competitive in the job market. And what about benefits? Offering health insurance, retirement plans, and other perks can attract and retain top talent. However, it's essential to consider the long-term cost implications of these benefits. As regulations change and labor laws evolve, staying ahead of the curve is vital for maintaining financial stability. Now, let's dive into risk identification and management. Every business faces risks, whether they're market fluctuations, operational challenges, or reputational threats. The key is to identify and evaluate these risks proactively. Risk assessment involves determining the likelihood and potential impact of each identified risk. Once you've prioritized them, you can implement strategies to mitigate their effects. This could mean transferring risk through insurance, implementing internal controls, or even avoiding certain risks altogether. Regular monitoring and review of your risk management strategies are essential to ensure they remain effective. By identifying and managing risks, you can protect your organization's reputation and financial stability. Corporate tax planning is another critical component of strategic financial planning. It's all about reducing your tax burden legally through smart business decisions. This could involve maximizing deductions, utilizing tax credits, or even reorganizing your business structure. The goal is to minimize your tax liability while remaining compliant with all laws and regulations. Succession planning is often overlooked, but is crucial for long-term success. It involves identifying and developing future leaders within your organization. Strategic financial planning plays a vital role here, as it helps you understand how changes in leadership can impact your finances. Preparing for potential financial risks associated with leadership transitions ensures that your organization remains stable and successful. Now, let's shift our focus to personal strategic financial planning. Just like businesses, individuals need a solid financial plan to achieve their goals. This process is highly personalized and takes into account psychological and economic factors that influence your financial decisions. The first step in personal financial planning is obtaining data to understand your situation. This means gathering information about your income, expenses, assets, debts, and insurance coverage. You need a comprehensive view of your current financial position to identify areas for improvement. Next, you'll want to choose your financial goals. What do you want to achieve? Whether it's building an emergency fund, paying off debt, or planning for retirement. Setting clear, measurable goals will help you stay focused and motivated. Identifying financial barriers is another critical step. What obstacles stand in your way? Low income, high debt levels, or unexpected expenses can all hinder your progress. Once you've identified these barriers, you can develop strategies to overcome them. Drafting a financial plan is where the magic happens. This plan should include budgeting, saving, and investing strategies, debt management, insurance planning, retirement planning, and estate planning. It's essential to revisit and revise this plan regularly to ensure it remains relevant and effective. Following your plan's advice is crucial. This means taking action, adjusting your spending, saving, and investing habits to align with your goals. It may require discipline and sacrifice in the short term, but the long-term benefits are worth it. Finally, regularly refining your plan ensures it stays relevant. Life changes, market conditions shift, and your financial goals may evolve. By reviewing your plan at least annually and making necessary adjustments, you can stay on track to achieve your financial objectives. Now, let's circle back to strategic financial planning for businesses. With a clear plan, your business can thrive in today's competitive landscape. A sound financial strategy helps you allocate resources effectively and anticipate challenges like economic downturns. The first step in strategic financial planning is determining where you are. Assess your current financial position, strengths, weaknesses, and areas for improvement. This self-awareness is critical for developing a strategic plan that aligns with your goals. Next, focus on what matters. Prioritize your financial goals and ensure your plan aligns with what's most important to you. This could mean reevaluating your budget, adjusting your investments, or redirecting resources toward your top priorities. Establishing goals is a critical step in this process. Set SMART goals that are specific, measurable, achievable, relevant, and time-bound. By defining your financial vision and breaking it down into manageable objectives, you can track your progress and stay motivated. Delegating authority is another powerful tool in strategic financial planning. Trusting others with specific financial tasks can lighten your load and ensure your plan is executed effectively. Choose knowledgeable individuals or organizations and set clear expectations for accountability. Finally, don't forget to repeat the process. Strategic financial planning isn't a one-time event. It's an ongoing process that requires regular review and adjustment. By consistently evaluating your financial situation, goals, and strategies, you can stay on track and adapt to changing circumstances. In conclusion, strategic financial planning is essential for both individuals and businesses. It's the foundation for achieving financial stability, making informed decisions, managing risks, and aligning with stakeholders. Whether you're navigating the complexities of corporate finance or planning your personal financial future, a well-crafted financial plan can set you on the path to success. So, take the time to invest in strategic financial planning today and watch your business or personal finances flourish for years to come.